The price signature section, which you're starting here now, is focused on giving you foundational knowledge on price signatures, which you will see in the charts, which you need to know for the following lessons. So we're starting here with failure swings. There can be either failure swing highs or failure swing lows. A failure swing low is formed when we make an initial low in the market, marked by this red dot here, and then we trade really deep back into it, marked by this low on the gray dot, but not quite through it. So very deep back into a previous established low, but then trading back away from it. There's also failure swing highs. We have this initial high that's formed. We trade slightly away from it, really deep back into it, but not all the way through, creating that high here. This is the failure swing to this high, and this is creating a failure swing high and a failure swing low. When you have this formation here creating failure swings, the relevant swing which you want to put focus on is that initial low that was formed or that initial high, not the actual following failure swing that was formed to it. So this is where the focus goes, and that's where we would annotate it on the chart. This puts our focus to the extreme highs and lows of the market. That's what we consider relevant, especially when we're framing our trades, using it as a draw, all of which you'll understand more as we continue to move forward. The first thing you should do when you notice potential failure swings in the market is compare that same area on a correlated pair or inversely correlated pair if you were doing something like Forex. So this example here, let's say this is NQ and on the right is ES. You notice on NQ, there is that initial high. The market trades deep back into that high, but not quite through it. That is a failure swing. That's the signature that we're looking for. So at that moment, we would classify that as a failure swing. But then we would go to the correlated pair over here and looking at that same point. Yes, we have that initial high, but we didn't trade into it and then fall short. We actually traded through it at that same high. So this is creating a higher high where this is a lower high. That is a divergence and instead would be considered a protected swing, which would actually change our protocol around this area here. You could trade away from that point, which we'll get into in the next lesson. You'll understand what I mean by that. Then we look at the lows. We have that initial low formed and then a higher low trading deep back into it, but not quite through it. We look to the correlated pair and we see that exact same thing. These are true failure swings, which we look to trade into and can be used as a draw. It's important to do that because this can change what your approach should be in the market at that time. So that's the first thing you should always do. Think I see failure swings. I'm going to look at a correlated pair just to confirm that they're true. If they are, then that's the normal protocol around failure swings, which you'll understand more of soon. But also if it's not, then we're considering it a protected swing and that would change what you're doing at that time.